All right, what's going on? Well, it's about 11 o'clock tonight, a little late, so I'm a little tired, but I wanted to review some days, go kind of give a few thoughts I've had. And the first one, unfortunately, yeah, the past few days I've done a lot more scalping, scaling in limit orders, and that has presented a problem with showing my trades. Uh, Quite frankly, because it is all over the place. So, until I can figure out a better solution to that, I don't have one at the second. However, I will show a few mistakes I've made this week. One being kind of dumb, but I'm more than happy to show it. That was over here. So I've been trading some of the Globex just to kind of test it out a little bit. The more I trade with limit orders, the more I'm finding I like it. But anyways, I did something kind of dumb. I was selling in here. Sold more, confident we'd come back down here. And, in hindsight, this was tight. I should have sold here, sold more, scalped out, sold up here or sold below here, scalped out, maybe, sold here. But anyways, one thing I did, I made a huge mistake on was I bought during this bar. And when we got the consecutive bear bars, I held and ended up getting out here. This quickly sold off. And the problem, and that's a problem with scaling in. I kind of broke a cardinal rule of mine, and that is when the market becomes clearly in the opposite direction, you need to get out. Big bear bar, odds favor your second leg. Don't be short. Follow through bar, get out of. Don't be long. Follow through bar, odds favor a small second leg. Get out of short, get out of longs. Look to sell, look to buy after the first reversal, because sometimes this happens. When you see this, and this is the problem with scaling in. You could just get, this was 88. Here is, this is almost 20, 14 points lower on a range that's been tiny. This is 2 point range. This is 82 to 88. 92 to 88. So not very big range in here, and this is 14 points. So, anyways, a few things that kind of leads me to another thing. So, I'm happy to explain some of the mistakes I did today. I'll be happy to explain them. I made money today, but I would have made more money if I didn't do these dumb things. Ended up selling the close bar one. However, and in hindsight, I probably shouldn't have, but I did. I held above here, got out break even, was buying with limit orders. I do remember buying here and getting out. I bought, and then I think I bought more lower. I can't remember, but I bought and I took part off, and maybe I bought more. I don't remember. But anyways, this wasn't the problem. Really, what my problem was, I ended up doing something kind of dumb, and I knew better, and it really was just not a good trade. And that was, so we had a follow through bar. I think I bought, scalped out for 1 point. And then we got this. And the problem with the trading range, this happens a whole lot, is you get these traps where you get 3 consecutive bull bars, but when you look to the left, you're still in the range. We're not above yesterday's high. We're not above today's high. Yesterday's highs are up here. And this, this looks great, but it's not impressive. It doesn't look like this. Where's this bar? So I ended up actually, I wanted to buy, and this is where it was really dumb, because we had a second entry. You have 2 legs up, possible second leg trap. You get out, bulls get out of longs below. I ended up buying 1 tick above this bar right here, and I knew it was a mistake. I should have gotten out. I debated it, ended up getting out, somewhere over here. and ended up going short at the close of this bar. Another mistake I made is I went short here, and I debated. I said, this is pretty strong. I debated time and time again. I was trading the macros. I was trading the June contract, and price went below this low. I was in the macros. I had a target at the low. I would have gotten filled, but I said I don't want to see how it closes, and then we got that, and that I gave up a lot of what I had, and I knew I should have scalped it. But really, another mistake I made, ended up buying somewhere over here and getting out on this close. And I got out because I figured we'd have a second leg down, and I ended up buying once or two times, for twice for 1 or 2 points. So in terms of buying 1 point here, buying 1 point here, and then taking the loss here, I basically broke even on those trades. But again, I had to stop down here. I should have trusted it, because sometimes when you get out, it's hard to get back in. And that was probably really it. I bought once or twice in here, made a small amount. I ended up buying the close of this bar. Maybe I should have held. I ended up getting out after that doji. Overall, I'm doing a lot of limit orders, and I want to talk about that for a minute. So I used to hear Al say a lot, he still says it, you have to trade. A lot of trading is discovery of self. And that's very true. And the longer I do this, the more I kind of realize kind of what Al's saying. You got to figure out what you like to do. For me, I like always in. I think always in is a fantastic concept. However, I like placing trades. I like scalping. I like limit orders. I like scaling in. And the more I do it, the more I kind of enjoy it. However, though, I've had many trades, hundreds of trades of scaling in at this point and losing. So I have learned more than once, and I still learn these lessons. The dangers of buying when you get these big bear bars. The dangers of selling after this many bars, selling this high, and then you get trapped, and then you just get squeezed out. I've made all those mistakes. But what I'm trying to say really is, you got to try both. I do think someone asked Al the question of, and I don't mean to kind of ramble, but someone asked Al the question of scalping. I want to learn how to scalp. Any advice? And Al said, well, you have to learn to swing trade. That's the better thing to do. And the reason Al's saying that is because there's certain points where always in. Al trades always in. Scalping is based off always in. Everything, you can really categorize everything to always in. There's some form of it. So what do I mean by that? Well, okay, big bear bar, always in short, because you're probably going to get a second leg down. Okay. Strong rally, always in longs, you're probably going to get a second leg up. So if you're buying below bars, you're probably going to get a second leg. And really, it's important to know that, because, for instance, here, so strong sell-off, but it's also a double bottom, strong reversal. Always in bears will get out here. So if you're selling this high, management's extremely difficult. You got to sell, you got to have a stop above here. Realistically, you got to have a stop somewhere up here. And you're better off if you can sell, here and here. So it's really not a great place to sell. And if you can know, and really where it hurts you is days like over here, where, these days, if you're not careful and you're buying below bars, then you get these big bear bars, and then you're buying down here, you get trapped, and then you just take a huge loss. So what's important is to understand these kind of days, okay? It's always in short. Strong enough breakout, odds favor second leg. I'm better off looking to sell above bars than buy below bars. But I can buy below bars, but you have to be careful. So, I don't know if that makes any sense. It makes perfect sense to me. I guess what I'm trying to say is, I have tried several times to trade perfect always in, where you just reverse. I sell below here. You get out, but then what do you do here? Do you buy here? Do you get out of shorts here, and then you buy here, and then you get out of shorts here? You go long here. You get out of shorts here. You get out of longs here. You go short. You reverse to long here. You reverse to short here. Then you reverse to long here. Then maybe you reverse to short here, and you go long here. And I've tried that, and I can't. It's so difficult to do. And I've really tried to trade always in, and it's funny to me now that eventually, at one point I just said, hey, screw it, it's a trading range. I'm gonna buy at the bottom, sell at the top. When it's going down, I'm gonna buy below this bar. I'm gonna scalp out. I'm gonna buy above here, and I'm gonna buy more here and put a stop down here, and I'm gonna scalp out. I'm gonna buy below this bar, scalp out. I'm gonna buy here, scalp out. I'm gonna buy this close, scalp out. Although I did it today, I shouldn't have. I'm going to sell this close. I'm not gonna buy up here, even though I did. It was a mistake. I'm gonna sell this close. I'm gonna buy above here, scalp out. I'm gonna buy below here, buy 1 point lower, scalp out. I'm gonna sell above this bar, sell 1 point higher, even though it's not a great trade, and scalp out. I'm gonna buy this low one, scalp out. I'm gonna buy above this bar, scalp out for a few points. I'm going to buy this close, scalp out. Maybe buy this close or buy this close, scalp out. And for me, I like that a lot more. So sometimes one of the biggest things I've realized for myself is I know a lot of house information. Could I do it? Is there plenty of stuff I don't know? Absolutely. There's plenty of things I need to get better at. But for me, the biggest realization is you got to make sure you're not doing these simple things. You can try and trade always in all you want. However, if the range looks like this, you're going to get killed. Trying to trade always in here is going to kill you. If you're, I hope that makes sense. If you're selling this close, putting a stop up here, and holding all the way up here, and then getting out down here, I don't think it's a great idea. You're far better off selling, scalping out at the low, getting out above this bar, or better yet, buying the close, scalping out. Maybe I don't know. You buy above this bar, maybe buy this close, scalp out because you're confident bears will make money. Big consecutive bear bars, sell the close, scalp out. Buy this low one, scale in, scalp out. Buy above, scalp out. So I don't really know. The best way I can put it is this. If you're having trouble and you're trying to trade always in, first ask yourself the basics. Is this a trading range? Am I buying at the top and selling at the bottom, which I should not be doing? Or am I doing what Al says? Am I buying at the bottom, selling at the top? The one problem with trading ranges, and this is the biggest issue I would find with always in, is, we had a situation over here. I did something kind of dumb. I bought this close knowing we'd have a second leg down, which makes it dumb because therefore if I bought here knowing we'd have a second leg, I'm implying that I know we're going to go lower, so I shouldn't buy here, I should buy lower. But I bought here, bought more below the bar, and had to stop somewhere down here. Didn't get stopped out. And the amount of times trading always in, I'd buy above this bar, even though it didn't trigger, get stopped out, or, I don't know, I'm trying to think of a better example. Instead of buying here and getting stopped out below the bar, buying more below. The more flexible you can be, the better you're gonna do, within reason. So, with that said, study the books, study Al's video course, trade a lot. I firmly believe, I've always liked trading. I overtrade, and that's something I'm working on. But I've always just had a fascination with, if anything, my problem is just getting in too much. I've never had the issue of not getting in. I've always been able to find something to do, which is good and bad. It's bad because I've got to learn I've had to, and I still have to learn it. Control, sitting things out, saying, hey, maybe this isn't the best thing to do over here. Maybe let's just do nothing. But it's also made me really genuinely curious, open to trying ideas. So always remember this. Institutions are buying below bars, selling above bars. So why not do that? You're going to make mistakes. I'm not advocating you trade in limit orders, but it's something to think about. There's a lot of, and also with that, you need to study, you need to read video, you need to read the books, you need to study. There's also something to be said for learning by mistakes. Prime example, I showed you that trade that I took and I lost. I did something really dumb. I bought after a breakout with follow through, and I took a decent loss. I bought here, got out somewhere over here, and it was a reminder for me. I knew better, and it was a reminder to say, hey, consecutive bear bars. This could go a lot further than you think. It went all the way down there. So, and it's okay. But that's why I think it's I've always had this thought, is one person better off just studying for 6 months versus trading? I don't know. I go back and forth with it. Probably, but I can make an argument against it. I think I learned a lot by doing. So for me, I've learned enough to say, hey, if I'm buying as this is going down, I may get in a lot of trouble. I probably shouldn't do that. And case in point, eventually you buy here and you get stopped out at the low of the day for a huge loss. Eventually you're going to learn to stop doing that. You sell this high and then you say, wait a minute, that's a surprise bar. We're probably going higher. I'm going to get out. You learn that mistake because eventually you sell up here. You sell this high and you get stopped out up here. When the smart traders are saying, that's a breakout, 50-50 chance we go up here. So the institutions, they're selling, and they're selling all the way up here. They're not exiting up here. They're exiting up here. And they're exiting somewhere way up here. So that's my little spiel for at least those things. If you're down and out, if you're frustrated, I've had more frustrating days with trading than probably not frustrating days. However, sorry about that. I had a phone call. Again, I don't know where I was going with it, but it's real simple. I've lost a lot of trades, and I've also won a lot of trades. But I think trading's really interesting because you kind of figure yourself out in strange ways. What I mean by that is, I remember, especially in college, I'd get angry when I lost on a trade. And you're just mad. Just for lack of words, pissed. And now I look back, case in point, this trade the other day where I bought here and got out here, I was like, wow, that was really stupid. Why'd I do that? And I kind of shrug it off, and the next day I say, okay, well, whatever. And I think that's an interesting transition. Everybody goes through it, I believe, where you start to kind of, I remember in college, I'd win for a week straight or 2 weeks straight, and then I lose for 2 months. I'd win for 3 or 4 days straight and lose for 16 days. I remember the amount of times I probably felt like the world was caving in. I don't know what's going on. I'm a complete failure. Again, probably more times than I've said, wow, I'm a complete success. But it's different in the sense of now, if I lose on a trade, I'll always find a reason as to why it probably wasn't a great trade in the first place. buying this low. I even knew doing it. I said, hey, this could be a second leg trap. We may get an endless pullback and a new low. Hey, this, we could fall a lot lower. We may fall below the low of the day. And I even knew getting out. I said, we may get bad follow through and second leg. And so again, you got to stick in there. You got to watch out. You got to study out, get in the webinar. But eventually, things change for you. Eventually, you start to see things differently. I mean, I could think of, I'll just do this just for fun. I haven't looked at this in a while. It's a little radar screen. Hopefully it'll open on this computer. I don't know if I've looked at it. Oh, well, maybe. No, I guess I have. So, let's find a random chart. XLE, I have no idea what that even is. Okay, let's look at a daily chart of XLE. Okay. Strong enough bear bar, second leg down. What do I think is going to happen here? Well, we have big up, big down. We're forming gaps. Tight trading range. We're kind of in the 50% from here to here. I think we'll go sideways. DPZ. Domino's Pizza. A huge heck of a mess. Strong breakout, sold off. So tight channel, may sell off and just go sideways. Tight trading range. Goldman Sachs. Tight trading range. Oh wow, this is interesting. 3M cut. I don't even know what this is, but I mean, just pretty. By the way, this is a great example. I may have to save this actually. You buy this close, you put a stop down here thinking, hey, there's no way I could lose. Is this what was for? I want to see one thing real quick. What 424.19? Is that a weekend? Let me check my phone real quick. No, that was a Wednesday. This was a Tuesday. That's Wednesday. So if hypothetically speaking, let's say you bought 100 shares. Better yet, let's just say you bought 50 shares, risking $10. Let's say you're risking $500. Okay, from here to here. Well, if your entry was, and it's not a great trade, but hypothetically, let's say your entry was 20. Price opened at 97. Therefore, you lost $23 times 50 shares. You lost $1,150. That can't be right. Maybe that is right. But either way, you get the point. Yeah, that's about right. You lost a lot more than you anticipated. So that's important to trade options. You can get huge gaps. But anyways, strong bear bar, very tight channel. This will probably have to go sideways. This is probably not going to be the low. Strong enough breakout, traders will sell, but this may be tight enough second leg up. The more I look at this stuff, the better I get. Tight channel, first down should fail. This is probably strong enough that we'll find sellers up here. It's dangerous to sell highs because you don't know. I mean, it's pretty tight. This is pretty extended. We'll probably sell off to the moving average. Strong bear bar. Odds are you'll get a second leg. We have a second leg, and then we rallied. Tight channel, so we may fall below here and find buyers. This is we're selling off, but where are the consecutive bars? Where's this? We're not getting that. We're getting sideways. Strong rally, 2 legs up, new high of the day, but I don't want to buy up here. Top of a channel, top trading range, I want to sell. Strong breakout, odds are we'll go a little bit lower. Gilead, that's kind of an interesting company. I haven't looked at that in a while. Just trading range. We're racing up, sell off, racing up, sell off, racing up. So what I think we're going to do up here? I think we're going to sell off. So we have this high. I think bears will make money that sold this high and scaled in, even though it's at the bottom of the range. So, and I looked at Procter & Gamble just because it's Procter & Gamble. What do I think about this? The very tight channel, climactic. We haven't touched the moving average in a lot of bars. We have an obvious tight trading range, possible final flag. So, maybe we'll get some sort of measured move up. Something like that. It's not perfectly drawn, but who cares? It's close enough. I think we're going to close the gap, but this is tight enough that the weekly chart looks like this. So, who knows? On a monthly chart, it looks like this. But the whole point, this looks climactic. Very strong, tight trading range over here. We're far away from the moving average. Best looking bear bar, assuming we even close up here, which I don't think we will. I think we're going to close. I don't think this will look like it does. Even if it does, maybe we'll get a second leg, but I think we're going to come back down to here. So, again, I could talk forever about this stuff. If I could. It's fun. And I can promise you, the more you learn, the more fun it becomes. I can absolutely promise you that. So, all right. So now that I've given my spiel, let's review some days. So, anyways, really, I know I keep saying that, I'm getting kind of tired. If it's hard, if you're having trouble, don't quit. You got to be committed. I'm committed to the point where I know I'll figure it out, because I am figuring it out each and every day. Plus, you got the micros. It's so achievable for anybody. Don't listen to people. And by the way, don't listen to people telling you that one broker sucks and all this and that, or I hear people talk about all the time, and there are some brokers you shouldn't use. My rule of thumb for brokers is real simple. If it's fairly popular, it's fine. Google top brokers, TradeStation, Ninja Trader, Interactive Brokers, Scott's Trade, E-Trade, if they're a big company, they're probably going to be okay. Robinhood, it's probably fine. And as far as psychology with trading, I don't know. I don't think much about it. I think there's a lot of crooked people when it comes to especially trading. There's a lot of people out there to scam you. And psychology to me is one of the easiest ways to do it, because I could talk to you all day about feelings and greed and fear and everybody's fearful over here. They're getting greedy, so you should sell. No. It's top of a trading range. It's a buy vacuum. Everybody knows in a trading range, if you sell in a reasonable spot, you're going to make money. If I sell here and scale in, I'm going to make money. If I, just like over here, why do we gap down? Well, because it's a buy vacuum. This is a buy vacuum. Bulls buy more, get out. I don't buy the whole psychology part of trading. I think it's crap. Sure, you can't be emotional. Okay, well, what I've learned in my personal experience is the more that I understand, the less emotional I get. When I know there's a 40% chance of a realistic second leg trap here, hey, I know that, hey, it's dangerous to buy up here. If I know I should get out of shorts here, I can't go, oh my gosh, I'm so emotional, I just get out of shorts. So be careful with psychology. Everybody, I like Jesse Livermore, fun book. Market Wizards, fun book. The turtle book, the dude that teaches someone how to trade, fun book. Are you going to learn anything from Market Wizards? Maybe, probably not. Just saying. So you really want to get into the more you understand about what the market's doing, the better you're going to be, the calmer you're going to be. It's that simple. The more you understand in a trading range, you need to buy low, sell high, and scalp, the better you're going to be. It's kind of like the past few days. I've tried a lot of 2-point scalps, 1-point scalps, 2-point scalps. And what's interesting is, the only really losing trades I had today was buying right here and buying here and, getting out right there. Now, I bought once or twice, so I almost made up the loss right here, between buying and getting out. But, okay, so I bought here, got stopped out. I stopped myself out and then bought twice. So basically break even here. I bought here, took the loss, sold. So other than those two trades, I don't know if I lost today really. So anyways, that's that. let's look at the week real quick. I'm going to be